Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a breakdown of the action in today's session, where we did see some losses across the board. And now the question, Justin, is this just a pullback within the context of a new uptrend that we have, or is this weakness going to lead to something more on the downside?
That is the question, and I guess we'll have the answer in a month or so. But for now, you have to kind of be prepared for both situations. So we'll talk a little bit more about that in the indexes, and also a few stocks that were holding up a little bit better, including Academy Sports and Outdoors, Axon, and Delta Airlines.
Okay, well, we'll get to those stocks, but first let's analyze those major indexes. The NASDAQ today down almost 2% to lead the losses here today, followed by the S&P 500 down 1.3%. The Russell 2000 lost 1.2%, and the Dow was off by 0.8% today. And as you can see on the NASDAQ, we had a pretty bullish signal on Friday with it getting above not only the 200-day line on Friday, Justin, but also clearing its highs from late last year. But today we didn't see a continuation of that strength.
Yeah, so now it doesn't mean that the rally's dead yet. It's this is just a down day, and we can't make too much of it. But at the same time, what we were saying last week is it was too early to declare victory. So a lot of times you can get above that 200-day line, or maybe even cross a trend line, and that's what we were seeing last week. But 1 day, 2 days isn't enough. You kind of have to see it maintain itself above that level. So right now we're kind of straddling the fence a little bit, if you will.
Yeah, and I mean, obviously it would be nice to continue higher for as many days in a row as possible,
Right.
but that's just not realistic. So yeah, we do have to balance our exposure accordingly, and hopefully investors who over the last couple of weeks since we got that follow through day on January 6th had been adding exposure. And what we had been saying recently is, it looks like a lot of the leading stocks were starting to get extended. So hopefully Friday wasn't the day that traders out there decided to go from 0 to 60 or, dive in head first. We're still taking this measured approach here.
Yeah, because the reality is, if this is a rally and the true beginning of a new bull market, you're going to have time. So it's okay to be measured. What you don't want to do is, like, all of a sudden get FOMO, fear of missing out, hitting you so hard that you make big moves. Like, oh, okay, well, I missed this first 10% of the rally on the indexes. Now I'm going to go in really heavy, because a lot of times that's when you start getting into bad positioning. You'll have a higher cost basis, not be able to withstand normal pullbacks, and it just gets you out of position. So a little bit of exposure getting added a little at a time, it allows you to build cushion in a number of stocks. And then look, if you get a couple names extended at the end, you maybe only get hit on those, but you still have that bulk that you've created. And this happens with individual stocks too. If you're pyramiding, you have that bulk that you're buying at the beginning, and then as you kind of add to your position, sometimes you might find that you have to get rid of your last position. That's why we kind of use a last in first out kind of methodology, and you get rid of that last position, but then you see what let's get that market feedback to determine whether or not we need to get rid of more, or if this pullback is just minor, maybe we get support at some moving average lines, the 21-day, what have you. We get support at those levels, and then we're right back in business and could go further.
Yeah, exactly. I mean, I think it would be great to have a constructive pullback that turns into an additional buying opportunity here, Justin. So we'll have to see if that's what we're given. But as always, we'll stay open-minded to all potential scenarios out there. We also wanted to go ahead.
Well, I was just going to say, one of the problems with pullbacks, it's something that we often say, oh, we'd like a pullback here, we'd like the opportunity to get more, but sitting through pullbacks is a little bit tougher, right? Because you start seeing your account go down, and you start thinking of how bad could this get. But remember, as you said, pullbacks are just a normal part of the process.
They are. So hopefully we see something like we saw on January 20th. After a 2-day pullback, we got a bounce right at some key moving averages, and that could have been an opportunity to add some exposure. We'll see what's in the cards this week. A very busy week, I might add, with a big earnings reports. We've got the Fed. So we really do need to be ready for anything and everything this week.
Yeah, absolutely. And so again, kind of setting your levels ahead of time. Okay, if this happens, this is where I'm going to do more buying. If this happens, this is where I'm going to do more selling, so that you're not making emotional decisions, because it's very easy when you see big moves, especially if there's news behind it, it's very easy to take the headlines and panic a little bit, or even panic just by the chart action. So you want to kind of have those decisions made ahead of time so you're not panicking in the moment.
Exactly. Okay, let's take a look at the S&P 500 as well, backing off after getting close to that 4,100 level on Friday. It's still above 4,000 and all of the moving averages. Taking a look at the weekly chart, we did see the S&P clear that long-term trend line that we have going back all the way to the highs. It's still right around that level. What are your thoughts on how we're kicking off the week for the S&P?
Yeah, I mean, it's not a great way to kick it off, right? To kind of fall back into a level that we were hoping we were putting behind us, but again, that doesn't necessarily mean that we're in trouble yet. It is notable that the Nasdaq Composite has been so far this rally been the one showing more strength. In fact,
Yeah.
it was the first one to kind of clear those December 13th highs. The S&P 500 got right up there and got turned away. That's an area that the S&P 500 has gotten turned away from a number of times, right around that 4,100.
Right.
So again, it's too early to say that this is definitely like, okay, it's done. We're going to have to wait and see how this pullback kind of plays out.
Exactly. Because, yeah, speaking of different scenarios that could play out, another one is just choppy
Yeah.
sideways range bound action. So we
Mhm.
need to be prepared for that too.
Yeah, and that's not fun.
No, it isn't. And the Dow also worth a quick glance today because it was down the least, and it's
Hmm.
still right around that 34,000 level. So we're seeing a little bit of this shift where the Nasdaq had been leading to the upside. Today, it also led
Yeah.
to the downside. So what are your thoughts on what we're seeing underneath the surface in terms of the risk on appetite versus the various areas underneath the surface and how they're acting?
Yeah, I think it's pretty typical to see,
Mhm.
the things that come down the most, they're the ones that tend to bounce up the most, and the things that kind of rally the most, when it is time for a pullback, you're going to find that they pull back the most. That's just kind of the nature of things. And the Nasdaq tends to be a more volatile index
Mhm.
because of how much it's loaded up with tech. So that's all normal. And I think it's important to just note that, look, one day does not a trend make. This is just telling us, hey, this is a data point. We need more data points to see more of a directional, and if this is more serious. But certainly we could just take a look real quick at XLP, which is the consumer staples sector spider fund. The
Up
fact that
today.
XLP was up today, and the other one that was holding up best among the 11 sector spider funds was XLU. These are both very defensive. So again, it makes sense that on a day like today, you had less destruction, even a positive close for XLP in those defensive areas. But again, it's just one day. Now, if we see a trend of, hey, the rest of this week, that's what's looking better. Both of those charts you'll note are below their 200-day lines.
Right.
So if all of a sudden those got back above their 200-day lines and started trending higher, well, then that would kind of tell you, oh, maybe there is a rotation here and it's back to risk off
Mhm.
from risk on, which is where we were.
Right. A couple more ETFs to look at before those three stocks, including China related ETFs here. FXI off 3.7% today. KWEB, another ETF we track, this is more concentrated to the China internet names, off by almost 5% today. And we've seen some strong moves out of China stocks as of late. So taking a pretty notable hit here today.
Yeah, and again, this is the problem. Sometimes when you're dealing with the more volatile names, a lot of these Chinese stocks had been having phenomenal moves, but the problem is when they fall, a lot of times they're going to fall a little bit more than the markets. And you can see that FXI, which is broader based, that was only down 3.7% as opposed to KWEB, which has again a lot of the more volatile names in the retail internet area. This is specifically geared towards the internet, and that was definitely hit harder. So again, the bigger they are, the harder they fall, and vice versa though. The harder they fall, sometimes the bigger the bounce.
Yes. Okay, so we'll keep track of that and see if we continue to see damage this week. Let's also check in on ARK K, which has been tracking those more speculative growth names. Had a huge week last week. We'll put a percentage to the gain last week, up almost 11%. So starting this week with an outsized decline. So there's a continuation of that theme of exactly what you're saying there, Justin.
Yeah. So, I mean, look, it was an 11%, almost an 11% gain last week. If you go a couple weeks prior to that, it was almost a 15% gain. So again, a lot of the speculative names really kind of started the ball rolling here with some big moves because they had come down so much. But now we're running into that 200-day line. And look, I don't want to see the speculative names necessarily lead, everything. It's much nicer when you kind of
fine
get
if they participate.
right. Yeah. Fine if they participate, but I don't necessarily want them to lead. But that's not where we were at. We were seeing a lot of broad-based participation from a lot of different areas. You still had your industrials that were, holding up okay, but they were being joined by tech. Some energy plays, oil and gas, still holding up there, like in the field services and so on. So it's much nicer when you get that broad participation.
Well, we'll have to see what these big tech earnings report and the Fed headlines, how that impacts
a lot going on
the
this
landscape this week. But let's check out ASO. This is a retail leisure products stock. Group 41 out of 197. The fundamentals have deteriorated a little bit here, Justin, seeing some red on the top and bottom lines. But from a technical perspective, we've got an RS line blue dot and a breakout from a cup with handle base. Kicking off the week with a gain of about 2%. We didn't get above average volume behind the move, but seeing that relative strength here today.
Yeah,
especially.
Today especially, because I mean, anytime you can stage a breakout and have a 2% gain when the market is down 2%, that's pretty impressive. And so it's kind of nice that it's coming out of this base pattern. And yes, the volume is an issue. It's nice that it did kind of tick up a little bit from recent action. So if you kind of looked at maybe the last 10 days, it's in line there, but it's certainly below the average of the last 50 days, which is represented by that squiggly line by the volume there. So the volume is a down, I guess, a negative. The earnings, as you said, there has been a slowdown there. The EPS rating is still decent at 83, but this is also in an area that has been looking a little bit stronger. We've been talking about some retail areas that do look a little bit better, and some leisure areas also. So this kind of merges the two with the retail and leisure. And I'm not as familiar with the company itself. I've never been into an Academy Sports and Outdoors. I can't sing the jingle like Allie can, which too bad you guys missed that at the beginning.
We'll spare everyone.
Maybe we'll close out with that. But it's still, you identify something going on with the chart, and that can sometimes be the catalyst that lets you say, hey, let me look into this a little bit. I think it is interesting that they have a lot of expansion. When you think retail, a lot of times you think of the expansion prospects. Way back when Chipotle Mexican Grill, when it was going through its big growth phase, it was because of its expansion. And so Academy Sports Outdoor, I know that they have like they opened recently a store in Indianapolis area, and I think they have the plans for 80 to 100 stores expansion up through 2026. So that's where you're potentially going to sometimes see earnings slow a little bit while they do that investment.
Have that capital outlay, yeah.
But overall, it ends up being something that the market can kind of look at and say, hey, this might take a short-term hit, but long-term, this is going to benefit in more earnings and more revenue coming in from the multiple stores.
Well said there, Justin. I guess big five, better watch out.
Right, exactly. And look, I mean, it's not like Academy Sports is alone. I mean, yes, you have
Right.
Big Five, which Arusha has often railed against, but you look at
Yeah.
Dick's Sporting Goods, DKS, and that's
Yeah.
another one that's
Stronger
been.
competition there, at least from the
Mhm.
from the stock perspective, but it sounds like on the store front as well.
Yeah, absolutely. So yeah, they're definitely a big one to be to be chasing after.
Yes. All right. And next, let's take a look at AXON Axon. Tried to move out of a base here today, but moved down a little bit alongside the broad markets losses, but down just 0.2% here today. But overall, Axon's been looking pretty strong, especially since that move off the 50-day line. But if you go back even further, as it bottomed, broke out of a bottoming base, and had a really strong reaction to that last quarterly report. I mean, that definitely put it squarely in our sights.
Yeah, absolutely. And again, the fact that it held those gains so well just really tightened up. I do own shares of this myself, and I picked them up, around that bounce off the 50-day moving average line. So I've had them for a little while. Leaderboard also has shares of this. I think I picked them up around the same time. But yeah, again, this is one where the relative strength is kind of telling a story here. This is doing better than the market. Today, it was up for a good portion of the day, and I mean, in fact, the Dow Jones Industrial Average even made it up for a while into positive territory.
Mm-hmm.
So there was that rally. A lot of things fell later in the day and just kind of kept on falling. But again, this was falling less, and so those things
Mm-hmm.
that fall less kind of tell you, hey, that there's some strength here. So definitely worth watching. The Taser 10. That was unveiled last week. A lot of people are considering that to be a game changer, and so we've had a lot of coverage on this. We had this as a New America stock last week. We had it as our stock of the day this week. So Jed Graham has written some stories on this one that I think are definitely worth a read, so you can kind of understand a little bit of what's going on and why the chart is kind of showing us this
Mm-hmm.
strength. A lot of times it starts with the chart and that relative strength, but then you can kind of fill in the details with the information on the fundamentals.
Exactly. And the volume profile looking strong here, seeing a lot of blue spikes underscoring the buying demand that we're seeing. And even though it does look like we're seeing a little bit of lumpiness on the fundamental side, these
Yeah.
forward looking estimates, 33% growth expected for fiscal 2023. We like to see that.
Yeah. And estimates, I mean, that's one of the things that a lot of people I think are going to be watching this earnings season.
Yeah.
The estimates, the guidance, because there are still those recession fears. How hard is that landing going to be? And so for companies that are kind of already projecting out that they've got, a rosier outlook, I think those companies are going to be rewarded.
Mm-hmm. And last but not least, let's check in on Delta
Let's see what you
Airlines
did there.
here. Working on a little bit of a handle, some pretty tight action, down about an 0.8% here today, but we have a little trend line drawn, a little alert right around that handle buy point, and we have earnings out of the way here. It looks like a lot of travel related stocks, whether it be airlines or you mentioned the leisure in general, that
Mhm.
sort of theme, have been on the up and up lately.
Yeah, and look, we've seen this before where they've been making attempts, they have relative strength, and then it kind of fizzles out.
Yeah.
But look, we had a very strong rally to kind of start this year, and like right around the holidays, and to start this year, really strong. And the fact is, we're holding a lot of those gains. One of the things I really like, it got knocked around a little bit after earnings, but other than that earnings, the volume has really dried up in this pullback. So that's another positive. So
Mhm.
whenever you're pulling back and there's not much volume behind it, that just tells you you're getting rid of the weaker holders, and a lot of times that can clear the way for a nice move.
Right.
But yeah, this is a nice little pattern that's being formed
Mhm.
here, and the depth was a little bit long. A little bit deep at 41%, but the fact that that handle is nice and tight at just 8%, I think speaks highly of it. And you've had a full, almost a full year of a base here. So breaking out of this, it's definitely had time to kind of heal itself. So we can see if this time's for real, and the travel, the leisure lodging, and those bookers too, like booking,
Right.
.com and Expedia. They're all kind of setting up right now.
Yeah, that would be good to see. And even though it's great to see tight action, and it also wouldn't be surprising or bad even if we see the stock coming down to the 21-day line, depending on how it does it, just to shake a couple more people out of there.
Yeah, again, nothing wrong with a shakeout as long as you're not in it.
Exactly. All right. Well, thank you, Justin. And thanks everyone for tuning in. We'll be back with more tomorrow morning on IBD Live, and we'll be joined by Joe Fahmy of Zor Capital. So looking forward to getting his thoughts on the show, stocks that he's watching, his market outlook, and more. So tune in 10 minutes before the opening bell, investors.com/IBD Live for all those details. We'll see you then, and we'll see you right back here tomorrow at the close.